Good morning, everybody. Around 11 a.m. here in the Baltics. 10 in the morning, Germany, France, 9, 10 in the morning, UK. Greetings to everybody else around the world who wants to tune in. Got a couple new charts as well today. I think it will help as we climb this wall of worry. Might as well just start it now, though, because it's so personal to us. We had news of further aggression. I mean, of course, Ukrainians suffer this every night. Drone attacks, horrendous amount of drone attacks that are increasing, not decreasing. But in case you didn't hear, Poland shot down multiple drones that violated its airspace during a Russian attack on Ukraine, calling it an act of aggression. NATO was alerted, airports were closed, and flights diverted. Something like 8 drones at least, I guess, went into Polish airspace. Poland has been very cautious to date about, provoking Russia, who just continues to rain terror down on Europe. But I don't know how they're going to react here. I don't know. So the hard thing about geopolitics is a lot of times we feel completely helpless as terrorist states rain down their terror. Bitcoin is still some freedom tech, though. You guys know this chart. Running the percentile bands on the price with a wonderful 96% R squared power regression. Nothing changing. All right. Zoom right in. I just pulled the model in on September 10th here. 112,519. 112,519. And we're still a little bit below the trend. We actually closed yesterday also below trend. So closing and opening, I know, is quite a weird term in Bitcoin, but it's midnight UTC time, actually, is when we close. Right on trend. All right. I want to keep this theme, though, of is Bitcoin on a new trajectory? If it is on a new trajectory, is it sort of a more stable, less booms, less busts? I have no idea. Nobody else does either. But let's at least look at the past to see how it looks. All right, so this is back to our price to sales ratio chart. I've changed the colors a little bit. I'm not sure if it's going to help. And I've added the price. Before I had the days above the 90th percentile. Let's just start here, see where we are on every 10th. Okay, so here we go with Bitcoin just on the price. Remember, we're literally on trend, and trend itself is 2/3 of the time. That's just what the numbers are showing for the Bitcoin power curve. Ordinary least squares regression. An incredible regression, by the way, 113,000. All right. The regression back in the top of 2021, 18,000. All right. And so here you can see we went well above 2x the trend. The number 9 there is 2x the trend. And let's go back to 2017. Oops, sorry. Well, 2013 we can just show. This is an incredible. We get to basically 8x the trend, but the trend is $95 when Bitcoin goes close to 1,200 there in 2013. And then here in 2017, when Bitcoin hits 20,000, the trend itself is 3,000. Okay. So 5-6x happens there. But these are only the broad bands. All right. And you can see again, we're not close. We obviously, historically, when you get above the 8 or the 9, we're running pretty hot. We're not above the 8 or the 9. We're just right on trend. Okay, so it doesn't really bother me. A lot of people think this is somehow the top. I disagree. Even if it is the top and we fall back down to number 4 or something next year, it's cheaper Bitcoin on the trend to buy. And by the way, if it falls down to number 4, then, and we don't even hit the 8 or the 9, then I would say we're on sort of a new trajectory compared to, these sort of booms that we've had every 4 years. But nonetheless, let's go back now. As I said in my title, Bitcoin does have fundamental analysis. Fundamental is using metrics of the company, typically, but Bitcoin, the system, actually has a revenue feature. All right, that is new coins that come out every 10 minutes, as well as fees. We can create a basic ratio here, which is basically analogous to the price to sales ratio in companies. That means your market cap divided by your annual revenue. Market cap divided by your annual revenue. This is a pre-expense ratio because obviously we don't know all the miners' expense ratios around the world, but we do know, at least academically, what they are fighting for on an annual basis, which, by the way, is not much, $15 billion, compared to, the number is around 15 billion today, compared to the gold market, hundreds of billions of dollars, the oil market, trillions of dollars a year. Okay? But what you can do is when you take the market cap divided by that revenue figure, sort of smoothed out, trailing 12 months, you get this PSR. I've shown this a lot, but I got a little bit of a different chart. So let's build it out here. This PSR. All right, this is on log scale. And the PSR itself increases. All right. So back in the day, market cap, all right, 2013, when we had 2 tops. I'm going to put the price on, but when 73x, 70x, 2017, we had many rises up and then finally just blow off to 112x. That is market cap divided by revenue. Fell back down. 2021, 137, 140x. The second top was not picked up with this indicator, so that's very interesting. And now here we're at I would actually agree this indicator shows more stable growth. But what kind of growth? Is it exponential growth? Whatever. Actually, the best fitting trend line of this indicator itself is power. It's not as good a 90% R squared as this sort of feature, which is directly on the price, but this is a scale invariant feature where you can look at the growth of this curve over time, and it's going to be proportional to wherever we are, whatever you pick on the curve. All right. So let's start to build out the ideas. All right. So just like with the price, the 0th and the 100th, that is the extremes around the trend, are really extremes. Probably not going to happen again. Usually we're set in the 2011, 2013 price spikes. Okay. Notice, by the way, the start of my data for this is a year after Bitcoin Pizza Day. Okay, because I'm taking all the data from Bitcoin Pizza Day, new coins, everything, turn it into dollars. How many times does that go into market cap? Back in May 2011, it was 17 times. Market cap was 17 times higher than miner revenue. This number keeps rising. Okay, it just does statistically. Doesn't mean it will always rise in the future, but statistically it's pretty strong. The 0th and the 100th percentile aren't going to happen again, probably. So that leaves us the 10th and the 90th. 10th and the 90th. Good morning, Gio. Hope you're doing well. The 10th and the 90th show some extremes. All right. Both on the top side and on the down side, or bottom side. Now I'll layer in price. Price will help us here. This can be on the right axis. It's going to be an orange. I hope we can follow this. Thanks. Doing well. Doing well. Always unnerved when our NATO friends get droned and bombed, but Ukrainians dealing with it every day. I'm going to keep this on linear. This will give us actually a different flavor of what really happens to price during a boom. So let's look at this again now. All right, price in orange. Now the price has nothing to do with these bands or this gray curve, right? I mean, it's in the calculation, but this price does not overlap with these bands. Don't worry. The bands itself only have to do with the gray ratio, which is price to sales. All right, so the point is, when you get way hot, way above it, it could be a topping indicator. What does it work? It does, actually. You always have to be careful, though, right? So here was the 2013, just like 2021, had a double top. So we topped at around 200 bucks, 260 bucks, maybe it was even intraday, and fell down to 60. So even though we are screaming overvalued here, we went right back down to the range here. All right, this is so early days and, volatile markets. Then we topped again here, and the price actually topped as well. Like, for years, topped. But notice how quickly the price rose as we screamed up above. Let me take off the 10th. All I'm looking at is the 90th percentile here. All right. Price starts to scream, and the indicator gets above the 90th. Like a week before it actually does top. 2 weeks. So super aggressive price action. As you can see, we're still in that $100 range in October 2013, and then whoop, 1,000. Linear gives us a different perspective, doesn't it, on Bitcoin's price movement? Then we move into a 3-year bear. Now I want to show you this indicator with 2017, and let's put on the 80th. Let's put on the 80th. Put on the 70th as well. Yes, they are. So, this indicator is interesting because it always pushes, it pushes higher highs, right? And it's hard to know exactly where the top might be because here, we're already above the 90th, right? We're above number 9. Here we're above number 9, and then here a little bit, but here is the blow off above number 9. And I have the top 90th and above in a different chart, which I'm going to show in a second. But, it's not a perfect indicator, but this is a pretty good valuation metric to show that, all right, when the price really moons, this indicator also is screaming. But it takes, it's a big wall of worry, a lot of Maylocks moments here, right? Maybe, and by the way, I remember very well hearing that big Bitcoiners, like big whales, were even selling a little bit here. $2,000, $3,000 Bitcoin, that was above the prior high of 2013. Could it continue? On linear, the price is very interesting here. It really moons. Okay, remember, the price has nothing to do with the bands. The bands are on the multiple, which is the gray shaded area. Nothing directly to do with the bands. Okay, then we fall again. All right, let's get 2021. Again, chilling out for, weeks and months, even years in some ways, around 8, 9, 10K. Big drop here. Which, by the way, of March 2020 did pull us below the 10th percentile on this metric. So, like, super discounted, as was the 2018 puke, end of 2018. So it's a great buy signal, by the way. Great buy signal. But then the wall of worry starts, and 2020, we can see on linear especially, really shoots up, right? In December, and then we're gone off to March. So it's really quick. You get above the 70th here in November 2020, and by March we were topped out, February, March. If we go back to 2017, it was a little bit slower, in fact. It took a year when we got, first we're flirting with the 70th percentile above trend, and then we got, you know, fully above the 90th. Now let's look at where we are today. All right, you saw what happened before. Let's look at where we are today. On linear, it kind of represents, I would say, you know, the price action of before 2021, right? Some just bumps up and down, and of course there was a big drop here. It seems very fast growing here, and it is, of course. This is linear scale on the price. But it is interesting that when you zoom in, you know, I would agree that the ETFs, the institutions, they did two things. They actually increased our sort of next push, which we didn't have, you know, back in the crypto winter of 2014, 15. We didn't have it even in 2020. You know, the price is really pushing quicker, perhaps, than it did before, and thus we have been, you know, smoother. People have talked about this, right? A lot of OGs are selling, institutions are sort of, you know, shaving off that volatility. Again, this price has nothing to do with the bands directly. The bands you need to look at here. But here, looking at the bands, have we gotten above 70? Yes. Fell back down. And now we're sort of consistently above 70 now since November. All right, since the old Trump admin started. So I will remind you of what happened in 2017. Took a year. Okay. And here we are today. Since November, we've been above the 70th and then above the 80th, sort of again flirting with it, but falling back. Now we fell back towards the 70. So it is true, and I agree that this time is, you know, cycles never repeat so precisely, but this time is different in that it's just a lot of OGs selling, a lot of institutional action. But the price is still moving up. Again, this trend line is not on the price, it's on the multiple. Okay, so this is why I sort of try to separate them. It's harder to see on this chart, I understand, but I tried to do it. So we're not above the 90th. We're not above the 90th on this metric. Let's go back to, say, 2021. When we got above the 90th, we were starting to explode in price. Okay, so we went above the 90th here. Let's even take off the 80th and the 70th now, so you know exactly what I'm talking about. Really start to explode in this metric when you get above the 90th. I would fully expect that to happen again. What this is saying is price is really stretched beyond what miners make on a revenue basis. I certainly like that. And I agree. Whew. Summer has, I think this might be one of the last warm days here, but it's amazing how summer has finally showed up. No air conditioning in my house. We'll get back to the politics. So here's what I want to show you guys now is if we see this evidence that, you know, it doesn't always call exactly the top, because look, we shot above the 90 here and we had to wait 6 months, all right, in 2017. But it came. Same thing. The 90th for sure came even twice, actually 3 times leading up. But these were very early volatile days and a huge spike in price. That's why I still am saying, I almost think people are being too bearish. It's totally possible Bitcoin never does. It's not going to have any sort of a boom like this. And if it does, the peaks will be lower and everybody knows the story. But why would you discount it yet? All right. The point is this gray metric has not extended above the 90th percentile, which is a multiple above the black line, which is 2.5x. We haven't hit it. Okay. So for more detail, let's go to this chart. This is the top 10 percentiles from 90, 91, 92, all the way to the hundreds. 100th again is always this like super rare. You can see the distance from the 100th to the 99th, which is all the more reason why I think things like hyper Bitcoinization just aren't happening. It's just not how the markets work. So I'm taking it off. Again, price on linear scale. We'll see what happens. Okay, so here we get a little bit better understanding of what could constitute a blow off top, at least according to the data that we had in 2017. So even in June, I remember Ethereum was booming here because of all the ICO craze. Even in the summer of 2017, Bitcoin was really hot on this metric, but it wasn't to the 99th. It was only to say the 95th. Yeah, 95th percentile. And then once we, the signal that it was crazy town was getting close to the 99th. Let's look at 2021. In January, it was really, I remember all the meme stock. I think GameStop was going gangbusters here. January 2021, everybody's home trading. We actually got to the 98th. And interestingly, the price still grew after this top metric signaled out. So it wasn't a perfect top call. February 2021, we were at 171x. That is, market cap is 171 times larger than trailing 12-month miner revenue in dollar terms. Price itself kept growing all the way to 61,289, 63,446. This was the top. April 13th. PSR is coming down. So interesting divergence. And then, of course, the interesting thing about this metric is the double top still occurred, but this metric kind of shows like it was out of steam. And you would have been out of the markets here. You would have missed it. I'm just saying, this is what the metric showed. The metric does not call this the second top, the scam top, as some people said. The top it calls is the first one, and not even to the day. All right, and then down we go on the metric. This is a really beautiful metric though for bottoms. And this thing starts to round. It's really nice. So anyway, now let's see where we are today. I know it's a different market. I know a lot of more institutions. ETF's been approved for a year and a half now. All that stuff. But we are not to, we're not to the 90th. And go back to this chart. Where are we? We dipped below the 80th. Could this have been the top? Maybe. I cannot predict the future for you. I wish I could. Yeah. I should probably learn TA instead of just doing all this math, but to me that sounds right. It sounds right. FOMO is increasing, I think. Even though this is the most unloved bull market, I do think it's increasing. So, the point is, I'll keep checking it. I'll keep checking it. It's not a perfect top caller, although it really was good in the early ones, right? It called it here, pretty much. Called it here. Where's the 100th? Yeah. Sorry. So again, let me go back. Again, the price is not overlapping the rainbow. The rainbow is here. So, this was, let's say this was tough on this indicator because you could have thought, oh, this was our top in Bitcoin was $240 indicator tops. And actually that might be the all-time high multiple. 10.3x the trend. Trend is 7. The multiple at the time in early 2013 was 73. The market cap was 73 times minor revenue. So you could have thought, well, that was it. And then you would have missed this. So double tops are always difficult. Just like we had a double top here. Although theoretically, this double top was better called, right? Because you can take the 100th off. But if you saw that we were hitting the 99th percentile already at, 53K, it's pretty good. But then, of course, you can use the model still as we crash. You never know when we're going back up, but we did go back up here for a little bit. Although this model doesn't predict the second top. It's very interesting. Let me go back to the every 10th. The second top petered out, lost energy at the 70th percentile of this metric. So it's kind of interesting. See, the 90th wasn't even close, 80th. I'm looking at the orange dotted line, not the orange solid line, which is price. But point is, we are still, definitely in like moving, high momentum territory, but we're not to historical highs. Good morning, Midwest. I agree with you. It's just very hard for me to be bearish on these multiples, right? I'll say it 1,000 times. I have no idea. But what I do see is clear 4-year just blow-offs past these number 8 and number 9 bands. Is it so wrong to assume that that won't happen again? And then, as always, I hasten to say, right, like, I'm happy to call this like a new era of Bitcoin where we're not going to have these higher, booms and lower crashes like we've had. But I'd have to see the data first, and I haven't seen it. So, I guess the one thing that I'm not showing you here is like some sort of a momentum indicator, right? And that's where you'd have to go back to our TA friends to really understand it. I fully admit it's sort of caveman to just assume every 4 years. But you can very as equally say it's not guaranteed. that we won't have another, the other 4-year top. So point is, if we continue on like this, maybe this multiple never gets above the 8 again. Certainly if it never gets above the 9. And then we fall back down and we're just on a new sort of trend following era, then I will fully admit that the 4-year cycle is over. Another thing about this metric, which is interesting, again, because it's a power curve, is that power curves mean that it's scale invariant. So anytime that we measure the change in that black line, all right, it's proportional to the same change in the black line later. That's different than like with exponential growth. Exponential growth is just constant. Doesn't matter how big the base is, it's just growing at that rate. That's not what happened. That's not what's happening here. This is actually a more sustainable curve. As you can see, it flattens out. So when people say, the amount of new coins from the halving has nothing to do with the price now, that's actually not true. It has a proportional amount to do with the price now as it did before. This is a fundamental indicator. This is price divided by revenue. Revenue is new coins and fees. So it's completely proportional. When you see this black line continue to go in this direction, it means it's a very strong, sustainable trend. All right, I'm talking too much. That's a good one. We need to put that one on a t-shirt. I think I'm going to try to make a t-shirt of that. That's perfect. Where do you come up with this stuff? That is a very good one. I mean, right? Like, doesn't it seem to you guys that people are stretching? Let's go back to this chart, which I introduced yesterday. Does Bitcoin seem big enough that it's not going to be affected by any of this other stuff as it grows? Here's Bitcoin compared to the money supply. Here's Bitcoin compared to the stock market. Here's Bitcoin compared to the household debt market, which is like credit cards. Here's Bitcoin compared to the corporate debt market. These are worldwide figures, by the way. Here's Bitcoin compared to the government debt market. Is Bitcoin big enough, more established enough that it's not going to, sort of do what it does with these booms? Maybe, but my money would almost be on the fact that it would continue what it's doing. This is not a perfect indicator, by the way, but I introduced this yesterday. I think just as a general sort of where is Bitcoin in the world of assets and liabilities, it's very, very small. I'll keep saying this as well. Like, this is kind of hard to do global assets, global balance sheet, because you do have this weird world of financial institutions which do things that the rest of us can't do without a charter, which is sad. So these let's take off the stock markets. These three things, all right, the liability side, household debt, corporate debt, government debt, they are mutually exclusive for sure. But then you have this weird fourth item, which is going to be the liabilities of the banking system, or even just the financial system with broad money, and that is the money supply. So I'm just adding that on, but it's probably not fully correct because not all, but a lot of this money supply will go into investing into these types of debt. So I know it seems like it's a weird circular loop, and it is. But these are the different types of debt in the world. And anyway, if you want to count up global sort of sources, which are liabilities, and uses, which are hard assets or real estate or inventory or your brand, that all goes on the top. That's impossible to quantify. It's easier to count up the liabilities. So yeah, that's what it is. But I need to work on this probably. I probably should shave off some of this money supply because we'll see. It's not a perfect indicator, like I said, but it's kind of my attempt to improve on the global wealth total of 1 trillion. No, sorry, 1,000 trillion, which is 1 quadrillion dollars that Jesse Myers puts out, which I'll put again is here. So he's counting things up, which is good, but you can't exactly add them all up because it's an asset and liabilities thing. Oh, sorry, you can't see it, can you? Here. It's an asset and liabilities thing. He's kind of right on his placement. Liabilities and assets. Liabilities and equity are here. Assets are over here. They don't balance, which is fine because it's hard to balance all this stuff. But, you got business, enterprise value and stuff is over here. Anyway, I'll come back to this. We got a while. We got a while before Bitcoin really eats into any of these markets. The other thing you could say is if you put the equity markets up and just gold, take away silver. It's gold and silver together. You barely see silver. Even that is something pretty cool to shoot for, right? This is all the jewelry in the world estimated as of March 2025. Bullion, coins, gold and central banks, which is only about 4 trillion. It's a significant, but minority of the total, 20%, 15 to 20% of the total is in central banks, and central banks are buying. Still, it's very small compared to, just look at public equity markets, right? These are all the stock market valuations in the world. NASDAQ, New York Stock Exchange, Shanghai Stock Exchange. It's all included in this orange. So even gold is not that big compared to equities. Will Bitcoin overtake the public equity markets? I don't know. But I don't see an asset that is big enough to sort of just chill out and go to a very small volatility and everybody's happy and it just grows on the power curve, which most of the people that say it's growing stably aren't saying it's growing on the power curve because they don't understand the power curve. Let's take off gold. So the point is gold and silver are roughly 10%. Actually, no, sorry, over 10%, even closer to 20% of the public equity markets. Bitcoin is is 1%. It's a good question, Gio. Let's pull up the gold Bitcoin power percentile chart. So I've been saying, if you're a gold investor, I would consider buying some Bitcoin. They might reprice the gold. They might reprice gold and Bitcoin. Have they said it? I haven't seen it. I mean, it's obvious they want more buyers for their debt, so stablecoin issuers are an easy target, but they're also very small. Let me show you. I'll pull up just the U.S. money supply. One second. Here's gold. Take off the 100th and the 0th percentile as usual. Gold peaked above the 90th, just like the dollar every time, even though these are very small numbers, right? Only gold peaked here at 15 ounces of gold to buy one Bitcoin. So Bitcoin peaked here in terms of gold. It also peaked here. First top above the 90th. Now it's not even at trend. It's pretty wild. It's not even at trend. So if you have gold and you want to get back at Peter Schiff's terrible advice for all these years, might be the time. Never financial advice, but it might be the time. So let me show you this Midwest picker and everybody else. Here's the total U.S. money supply. All right. Central bank liabilities are down here as a negative, as I showed you with other stuff. It's bank reserves, Fed repos. Let's just even take them off. All the liabilities that we as a public can use and trade around like money are here. All right. And this are not just from banks, but, you know, it's a huge stack. All right. And this doesn't even include euro dollars, which are dollars, offshore dollars. I will finally be able to update this chart, by the way, tomorrow to June. Shows you how long this takes to, you know, get updates. The Federal Reserve will release it on September 11th, tomorrow. So savings deposits are the biggest chunk here of cash. The things that are most like stablecoins are, there's two things here. There's repurchase agreements and money market funds. I'm going to take off institutional time deposits, retail time deposits, savings, demand, and physical cash outside of banks. It leaves us here. Retail money market funds, institutional money market funds, and repurchase agreements. All of this is levered stuff. All right. All of these are surrounding treasuries, the treasury markets. Okay. So, and they're all counting up the liabilities of various actors in the financial system. But these are the most liquid monetary instruments that have to do with the treasury markets. So you count that up, it's 11, 12, 14 trillion. You know, I could do a ratio that probably would be interesting is these three portions of the US money supply divided by the federal debt would show you how sort of involved basically how this is kind of like hot money chasing treasuries. All right. So it's already gigantic. So your point about the U.S. using Bitcoin and stablecoins to devalue debt, I agree. They need more buyers. They always need more buyers, 100%. By the way, look at the Fed repo section. Fed repos here, which is like base money for money market funds and hedge funds, was taking liquidity out. See how that number 7 and number 6 really weren't rising during all the monetary easing of the crazy days from 2020 on. And then once they said, okay, things are maybe safer now, let's stop manipulating the market, they actually let it go back. So watch how the money supply increases, specifically number 7, goes up as the Federal Reserve gets less involved. This is dangerous. I mean, this is dangerous for inflation, for sure. Nothing's gone crazy yet, at least from what I can see from March. But the Federal Reserve has better numbers than I do. So this could be inflationary. But the bigger point I wanted to say here is none of this is stable coins. These are just, pension funds, hedge funds. There's a lot of money sloshing around trying to chase higher yield than the treasury market offers themselves. So it's like rehypothecated treasuries, basically. So it's, instead of the money market fund just buying a treasury, the money market fund's going to say, hey, I'll take your repo. You pay me a little bit higher interest than the treasury would pay me. Everybody's happy. You get the liquidity of my money. Money market fund's just like a stable coin. You get the liquidity of my money, which you can take, trade on the markets, long, short stuff, do whatever you want. You pay me a higher interest rate than I'm going to get from the treasury. That's what this stuff is. It's rehypothecated treasuries, pure and simple. But my point is, it's already a gigantic market if you count just these 3 portions of the money supply: repos, institutional money market funds, and retail money market funds. 14 trillion. What's the stablecoin market cap? Like 150 billion. They will do it. They will love to take stablecoin money, but it's very small right now. I would say it's very small. Yeah. No, it's a good point. I mean, I should do more analysis on the transfer volume. Actual volume is huge. It is huge of these instruments. It's liquid. It's global. There's no barriers to sending or receiving. But the value is very, very small. Very, very small. This is value. This isn't transfer. This is a stock number. It's not a flow number. So it's a good point. I mean, I should track that better. Partly, they're not going away. They're definitely not going away. They're not going away. So yeah, all these reasons and more. Liquidity is coming to the crypto markets, coming to Bitcoin. It makes sense that some of this money could move into stablecoins and more. Stablecoins could keep increasing their market share. But what I'm saying is I agree with you. It definitely will. And it's super small right now by market cap. Super small. I think I've drawn it before, but now I don't quite know. But I need to take, you don't need to count this since this is already removed from the market, the negative. But just taking this number, the total of these 3 numbers, divided by the debt, that would show us a ratio of, we could do math on that number. How hot are we? How low? Notice a pretty obvious question here. The global financial crisis had nothing to do with demand deposits, had nothing to do with what the Austrian school warned. Demand deposits were at all-time lows here relative to the total money supply. This is the sacred demand deposit. It did rise here. I totally agree. This was a lot of monetary inflation, and we saw it. These are stimulus checks to individuals and businesses. But going back to the financial crisis, where was the financial crisis in the money supply? It was here. Clearly in these, it was in money market funds, and it was in repos. It was also in Eurodollars, which we don't see here. You know, Norway pension funds were investing in mortgage-backed securities. That creates a liability on the broad money supply, which you can clearly see here. Look at it, top, right there, and then crash. This is the global financial crisis. And then what do we see here? Looks pretty fast to me. Looks pretty troublesome. I'm not calling for a top tomorrow, next month, next year. I have no idea. But looks worrisome. You know, compared from, say, 2009 until 2018, not much happened. Then more risks started. It's just the U.S. financial system. The U.S. money supply. I would say it's a warning. Here's another thing. We don't have an answer to. We do not have an answer to. Maybe we will get an answer this cycle or coming into the next one. Is Bitcoin has never been around a true global financial crisis like this. By the way, I showed you the stock market fell 50%. Global figure here. Stock market was 69 trillion when Bear Stearns was bailed out. Bear Stearns investors in October 2007. 69 by November 2008, 33. More than 50% liquidation. The stock market value. Of course, it comes back. A lot of money printing, a lot of manipulation, but so that's interesting. Now, Bitcoin started here, right? As we know, Bitcoin started here. So we never really had, you know, Bitcoin was born poetically in the global financial crisis, but we never really had one of these events, a 50% drawdown event. This is a pretty big drawdown, actually, in 126 to, this was a 25% drop. Bitcoin actually was going down here too. So the question is, and I don't know the answer, but how will Bitcoin's price react when and if this thing crashes? Or will the Federal Reserve do what it did here and intervene? This is basically a soft bailout, right? So that the Federal Reserve wanted them to do more in the market. They said, okay, I see you don't have the appetite to stay in the market. We'll take your investment, basically, and we'll pay you interest. And then they got out of it. They actually unwound it. Notice they didn't do that to bank reserves. That still hasn't fully unwound from the global financial crisis. Bank reserves typically are nothing, all right? Because that's what the Fed is supposed to, well, I mean, I know as Bitcoiners we all have our complaints with this, but the way it's supposed to work is they have a very precious amount of bank reserves, and they need to lend on those and earn interest and promote economic growth. I know it's a monopoly and it's not. It's better to have anybody can open a bank and no central bank. I know all that stuff. But I'm just saying that's how it's supposed to work. That's not what Ben Bernanke decided to do in 2008. He decided to bail out all the bad bets. And by the way, the bad bets did not come, they were not in the demand deposit realm. See? Look, if I put all the money supply of the United States on, do you see how small demand deposits are as a proportion? It's right there as the top. I think it's something like 7%. Look at the demand deposits number 1. I need to add it up. I actually don't have it total. The point is, if it's probably something like 7%. That $1 trillion in demand deposits, number 1. I think it's like 7%. I don't have the total here, but if you add every number there, 0 through 7, you get the United States money supply. It's going to be, what, 15 trillion? $1 trillion of that were demand deposits, and they weren't like growing crazy. I'm not defending the banking system. I'm not defending the Federal Reserve's monopoly, but you just weren't being told the truth if you were telling that it's fractional reserve banking of demand deposits. Yes, it has. I agree with that very much. This is a very costly move. Lots of inflation here, price inflation, lots of bailouts, lots of malaise, sort of zombification of the economy, not trusting the markets, not trusting people to work together, but just to sort of paper over their fears, and yet huge inflation. So this is the best way I know how to paper or sort of show the papering over is look at the negatives now, the Fed repos and the bank reserves. Bank reserves are for banks, with Fed repos are for non-banks. It's like money market funds. So these two mounds, let's even just take away the bank reserves. This is the, oh no, I can't do it actually, they stack. These two lines here are softening. It's bailout money. It's softening perhaps what, would have been worse. So here, started to crash. Ben Bernanke said, no, we'll give you padding. And that's what he did. And that padding exists to this day. This is sort of zombification of these old industries. They did not allow them to take the loss. Big problem. Anyway, I'm probably staying too much on that chart. What else you guys want to see? It's a wall of worry. In linear, this price looks pretty staggering, but normalized to minor revenue, which is a proportional. This black line shows that it's proportional. All right, the larger the minor revenue, the larger the network, but it's not growing exponentially unsustainable. It's an important point. Yeah, we're running a little bit hot, but we're not as hot as here. We're not as hot as here. We're not as hot as here. When we get to the rainbow level, then we will be hot relatively to the past. So again, I'm not too freaking out about these levels. And like Gio said, I mean, this could easily go back to 100,000. Price could crash another 10,000 here. Totally see it. Yeah, I mean, if you just look at the U.S. money supply, you see the huge opportunity to hold something as rare as, 21 million units. You look at the global balance sheet, roughly. See how small Bitcoin is compared to all the stocks in the world, all the household debt, corporate debt, government debt. You look at some of these curves and you just wonder, like, how are people not as bullish on Bitcoin as we are, right? Does Peter Zion not think that there's going to be, more monopolized government borrowing beyond people's means, household borrowing beyond people's means, government borrowing beyond people's means? Sorry, corporate borrowing. I need a total figure here, but it's interesting. Debt markets didn't totally collapse. They did go down a little bit. Some people were liquidated, but at least on this chart, which I have from IMF, it's not like a total destruction in the debt markets. Just a couple months down, then more and more debt. But the equity markets were crushed. 50% fall. Of course, you only had to hold on for another 2 years. And all the while, each currency unit is being devalued, buying less and less of, the same priced goods that it could years before. I mean, I'm looking for people to steel man the other side, right? So tell me if you guys think, right, like a lot of people are saying we're, no more cycles, no more booms and busts. Yeah, it's very much a Cantillon effect for the debt markets, right? Whoever's closest. Think Tether. Whoever's closest to those trades makes the most money. And you can think the banking system itself, right? Sovereign debt is obviously a huge market. Where's our global? I'm not sure if this is again, fully accurate. I've put in the numbers that I know for sure. I've cleaned out, because sometimes the IMF is not actually full in its sort of global data, but U.S. is a huge portion of this, right? 37 trillion out of 88. But they just keep growing. Yeah, 100%. 100%. I agree with this. Like, just think about it this way. This black line is growing $100 a day, and that $100 a day will increase to further dollars a day down the road. Right now, it's about $100 a day. Right? See? A little over $100. 431. No, sorry. 244 to 352. 108. Soon it will be $200 a day. Soon it will be 300, 400. Do I have a chart? I don't know if I have a chart of that. I need one. Well, you can collateralize it. I've heard some people try there's obviously Debify, HODL, but also what's this other one called? I haven't done any of them, okay? So don't, it's always never financial advice for me. I can give you another name. I have no, sponsorship from these guys. Debify actually has sponsored in the past, but let me find the company. Sorry. What the hell is it called? Lava. Lava's another one. Lava, Debify, HODL. The good thing there is you don't sell. The bad thing is you have to post more than you're going to get in money. So that could be as much as double, i.e. a 50% LTV, or 25% more, i.e. something like a 75% LTV. I know the ratios kind of change the closer you get, but plus there's fees, there's interest. But it's a total strategy, by the way, you could collateralize your Bitcoin, take the fiat, and buy more Bitcoin. You could do that. It's been done before. It's basics. I mean, let me show you. That's what these guys do right here. They borrow. Everybody here is borrowing money from someone at some rate, paying someone else a more expensive rate. But the most extreme are these three: money market funds and repos. Right? This is like hot, usually short term, very not regulated money. So there's huge amounts that are doing that right now with US dollars for treasuries. Everybody on the flip side of this trade, so you count up the liabilities. These are liabilities for hedge funds and traders and banks and stuff. Everybody on the asset side of that trade could just buy treasuries, but they would get a less return. So what they choose to do is say, okay, I'll give you my money market fund issuance or this sort of short-term loan, but you have to give me a higher interest rate than I would get from the U.S. Treasury. That's what these people are doing, all of them. So in a sense, you can do that with your Bitcoin. You could just buy Bitcoin, or you could lever up your Bitcoin and pay an interest and hope that you're going to get more in the future on the upside. It's totally a strategy. Again, never financial advice. I don't recommend, much leverage, if at all, but you can do it. Yeah, I mean, I would honestly say, if you want to do that, like, you have to pick a very, very small amount of money that you'd be comfortable selling at a bad price. Because the good thing about doing it is you don't have, like, all these people have relationships with banks, they have relationships with hedge funds, money market funds. There's constant revaluation of their credit worthiness. You don't have to do that with Bitcoin. With Bitcoin, you just post the collateral. Everything is reliant on the Bitcoin price. And there's literally no research that the fund giving you the money in expect for a pretty high interest rate, which is usually close to 10%, by the way, which is pretty high, in my opinion. Because to make money, you need Bitcoin within a year to go higher than that, just looking at a year. But the people giving you money, giving you fiat for your Bitcoin, they don't have to do any research on you because the Bitcoin is posted as collateral. You could argue how safe that is, whatever. Debify, I think, is really good because they have a multi-sig. Like, that Bitcoin is not being rehypothecated further. It's just staying there. Whereas all these guys are sloshing treasuries around like nothing. This money supply, by the way, didn't exist before the financial crisis. They went back with Dodd-Frank and had to recreate it, and it was a nightmare for me to recreate it. But anyway, I more or less have it. Looks pretty high. But anyway, it is true. It's really nice with Bitcoin. Like, you don't have to do any background checks. You probably do KYC or whatever, but all they want is your Bitcoin. And if you post it, you collateralize it, and you can't pay your loan back, then they just take your Bitcoin. And they're going to take your Bitcoin at a higher price than you want them to take it. But if you're willing to take that risk, then, you don't. At the end of the day, you have to be comfortable losing, I'd say, 50% of the value that you could have gotten just selling at spot to exchanges. It doesn't mean you will lose 50% of the value, but that's like the risk. If you factor in the interest rate, you factor in the LTV, you factor in a loss of price where you weren't paying attention and you're stopped out and they margin call you. Those are all the things you got to worry about with if you're getting your Bitcoin, if you're playing that game, like Gio says, it's an OG. Check out Debify. Hodl, let me know how it goes. Debify has sponsored here, but I don't know if this Lava is as good. Lava might be a smooth way, but your Bitcoin might not be as safe. Debify, your Bitcoin is for sure safe. This is an interesting point. This is an interesting point. Yeah. I guess, yeah, technically. You, as the borrower, are technically short the dollar when you borrow in dollars. Because obviously, unless you're just doing lifestyle, like you're borrowing because you want to borrow and sort of not spend your savings or something. But if you're borrowing in dollars and trying to buy more Bitcoin, then you are definitely long Bitcoin and short the dollar. It's like in real estate. If you borrow in dollars or euros, you are short the dollar or euro and you are long real estate. And of course, there are people on the other side of that trade. It's a game. It's a zero-sum game, by the way, in the short term. I think you could argue in the long term, And definitely you can argue in the long term, like, I go to the bank, I pay them an interest rate, I can have a house, utility, whatever. In the long term, it's not zero sum. But if you're playing these games like 6 months to a year, it's one person is probably going to lose. So I would be careful, be you. So that's my point. Iceberg. I would say if you really want to do it, you have to have a very, very small amount that you're comfortable losing. How successfully were you doing this on Binance? And were you borrowing in USDT? Good morning, Satoto. Good morning. Yeah. No, it's totally true. And again, that's why I don't see hyper Bitcoinization happening anytime soon. I mean, not that I necessarily like any of this, but just look at how strong these lines are. They only get bigger with a few very unsustainable bust pieces, mostly in the equity markets. This is a huge drop here. I don't even recall the news being that bad in November 2022. This was exactly the time that Bitcoin puked. It's interesting. And then here they had to sort of fake out a bailout for the Silicon Valley banksters. You don't see any of that on this chart. This is a global idea. What do you think? It's the trillion-dollar question. Good for you. So you know the game. What was your LTV? You were borrowing against Bitcoin and buying more Bitcoins or some shitcoins? Either way, I'm not judging. I'm just asking. Yeah. Very true. Very true. Someone's got to show me, how this collapses to zero. They're just going to print more. They do everything they can to increase the chances of this money supply increasing itself. I'm just posing, man, like everybody else. I'm trying to stay sane, learn from you guys. What is this? Number 7. I open up my icon in another window. Interesting. I'm certainly just not that worried. I don't know. I know there's so much FOMO about the about the mempool debate stuff and the filters and knots versus core, but there's a price for everything in the market and there's a price for everything in Bitcoin. So I mean, can someone give me a good reason why we're not going to shoot up to, let's say, 2.5 times the trend of market cap versus miner revenue? If you just tell me it's because of institutions buying, I don't buy that. But Doesn't mean it won't happen. Sorry, it doesn't mean it will happen for sure. But it also does not mean that it won't happen. This was a nice, I think this is a nice top indicator. We're not there. Good for you, man. I mean, that's a lot more Bitcoin than you were pledging, right? Than you were getting in fiat. So good for you to manage that. It's a thing. Repetition is the mother of all learning, right? I want to keep comparing the power curve with the exponential curve. That's a big question for me always. All of these markets are a straight line on log scale, right? Except for this. That's the only thing that doesn't grow on a straight line on log scale. This is a straight line on log scale. This is gold and silver. I do think gold will slow down. It could not, maybe it won't slow down for a while, but Bitcoin is growing way faster still than what gold is doing, even with this crazy boom over the trend. The gold trend itself is like maybe here. So it's way over trend. I mean, if you drew a straight line, it would predict like 11, 12 trillion instead of 20, which it is at. This is March, of course. It's even 20 now if you get out to today. So the key is making the comparisons between, volatility, trendline growth. Bitcoin's still better than any other asset. What do you say, guys? Look at that. Gold was $3.3 trillion in the global financial crisis. And some people use gold as this predictor of what Bitcoin could do, right? If we had another crisis, gold did drop. Decent drop, 20, 25%. But then it went up. And then it went sideways for 7 years as Peter Schiff poo-pooed on Bitcoin. Silver's sort of an unnecessary distraction. Everything's going to grow for a long time. You do have this phenomenon. It's a good point, Gio. Every time we take out a loan, every time we you know, sort of don't fully claim our sovereignty with Bitcoin. It is true, you know, you feed this beast, this fiat beast down below of assets and, sorry, of liabilities, of debt. Let me search for it. Hold on. I got a different screen open. You're hilarious, dude. Here we go. Where the mind is without fear. Where the mind is without fear and the head is held high. Where knowledge is free. Where the world has not been broken up into fragments. Is this ChatGPT suggestion? By narrow domestic walls. Where words come out from the depth of truth. Where tireless striving stretches its arms toward perfection. Where the clear stream of reason has not lost its way into the dreary desert sand of dead habit, where the mind is led forward by thee into ever-widening thought and action into that heaven of freedom, my Father, let my country awake. Ah, it's an Indian anti-colonial poem, huh? Of all the colonies, India, I don't know. I don't know if I can make broad strokes like that. Len fiat is nay. Daniel doesn't like it. I presume Daniel doesn't like it, or he doesn't like my reading of it. What's today? Wednesday? Friday. I'll have this updated by Friday, guys. You can wait with bated breath. Oh, you do? I saw the pig. I thought it was just or is that because of Porkopolis? Yeah. Sorry, I forget my brand every once in a while. You guys know the reason, right? It's a nod to my hometown in the 1800s. Yeah. It's a nod to my hometown in the 1800s. Had a lot of hogs. Turned into a big hog city. And then, you know, exporting hogs all over America. And then, because of that, they had this interesting byproduct of a lot of tallow soap. Procter & Gamble became a huge company, still to this day, Fortune 500, and it went from consumer products to be this marketing mega giant. The point is, you never know. You never know where the economy can take you. Very exciting, huh? It's a good poem. It's a good poem. Listen, I'll have this updated by Friday because I think they're going to post it tomorrow. It's only going to be through June. Still tremendously trailing data. You know, they're not going. I think they're not going to let it fall like it fell here. It wasn't even that much of a fall, but maybe a 20% fall. I need the totals here. I can't do my math on the fly, but they're going to keep increasing the money supply, guys. That we can be sure of. Bitcoin is very cheap in gold. in my opinion, unsustainably cheap. Let's see. And the message from here is I really don't think, again, the percentile, we're still in pretty chill territory in this chart. Not as chill as this chart, where we're even more chill between the 6th and the 7th. Here we're between the 7th and the 8th, right? Well above trend, by the way, so it's different, little bit different phenomenon. But as we have seen in every prior cycle, we moon above the 90th. Someone give me a reason why that's not going to happen this time. What do you mean, Rumi? Rum? Am I missing something again? I'm going to cut it here soon, guys. So, Daniel, you got to answer. I'll keep. Yeah, he likes the poem. Hey man, I'm the last person to judge about what anybody does with their money. Last person to judge. I know there's a lot of, might have some Bitcoin maxis watching or whatever, and it's super, can be super risky, but if you can accumulate and expand your stack, more power to you. What do you mean rent cuts? Salt lending as well. Is that old company? Like a long time ago around? You're more plugged in this morning than I am. They should go up. They should go up. It's an increase in the money supply. So again, I got to do these negative because it's only what the banks can hold. But if we look at this bank reserve number, pretty weak. So imagine this as a positive. This is only what banks can hold. All right. So that's why I'm putting it as a negative. A negative $3.5 trillion in March. I should show you the full one. Anyway, there's clear room to, money has been destroyed over the last couple years. This is like a liquid reserves for the banks. It was as high as 4.3 trillion. Now it's down, 3 and change. Aggressive rate cutting means that this number goes up or goes further back down, which means more money printing, which means more lending theoretically, although nothing is for sure these days. Salt Shield, no liquidation. No liquidation. Is it Bitcoin only? And how can it be no liquidation? That seems like they'd have to do other due diligence on you or something. It's going to be an interesting fall, guys. You know, is it going to be this much of a rocket ship? I don't know, but it totally could be, in my opinion. All right, guys, I'm going to cut it here. Thank you for joining, as always. Have a good Wednesday. I'll be back tomorrow. And, you know, we'll keep train spotting the markets together. So thank you. Let me know if you if you have any other charts you want me to draw, whatever. I'll do my best. Thank you guys. Midwest Picker, Daniel, Geo, Iceberg, everybody for tuning in, as always. Peace, guys. Take care.